Well guys, I think I have a problem. I can't seem to stop buying Palantir shares. As of right now, I have 767 shares of Palantir at an average cost of around $22.50 per share. And over the past month or so, I've added well over 200 shares to my position and brought my overall cost basis down by about $1 per share, slightly more than that. And given the dramatic price drop that we've seen with Palantir shares over the past month or so, I thought it would be a good time to bring you an update on my Palantir YOLO. So in today's video, I'm going to talk about why I keep buying Palantir shares, and then I'm going to share 2 reasons why I'm still very bullish on this company in the long term, as well as 2 potential risks that I see for the future. So let's get right into it, starting with why I keep buying Palantir shares. Now, if you've seen any of my other videos on this topic, you'll know that Palantir is the single largest investment that I hold in my portfolio in an individual company. After doing a significant amount of due diligence on this company and on this stock, I think that Palantir is one of a very small handful of software companies that is going to rule the world of next-gen software, and that is going to become very, very widely adopted in both commercial and government enterprises. And when you combine the level of conviction that I have in this company with the fact that I honestly believe it's oversold at the moment, it just seems like a great buying opportunity. From the beginning of November to today, Palantir is down around 30%. And when you compare that to the overall market, which is barely down 0.5%, and take into account the fact that there's been really no negative news or negative catalyst of any sort for Palantir over this same time period, for me, watching the price dip like this in the short term is amazing because I have such high conviction for this company in the long term. Over the next 3, 5, or 10 years, I am buying up every dip that I see. At every opportunity that I have to lower my cost basis, I'm taking that. And this leads me to the next part of the video, which is 2 major reasons why I'm still very bullish on Palantir, despite the fact that since going public and running up to about $27 per share, it's been more or less trading sideways. The first reason why I'm incredibly bullish on Palantir for the long term is that their total addressable market, or TAM, is huge, and I don't believe that the market is accurately assessing what the TAM will actually be. Palantir's leadership has indicated that there are use cases for this software in pretty much any industry that you can imagine. And in pretty much every single case, it's going to bring increased efficiency, lead to better decision making, and save money. If you look at the offerings page on Palantir's website, you can get a rough sense of just how wide the scale and scope of where they can potentially do business is. We're talking about everything from anti-money laundering to AI and machine learning, the automotive sector, racing, contract management, cryptocurrency, and this one is a new one, by the way, which I'm going to come back to in a minute, but this was just launched a month or 2 ago. We've got the defense sector, the energy sector, financial services, Foundry for Builders, which is also a relatively new product for startup companies, and so on and so forth. The list keeps going on down. Pretty much every single industry or sector that you can imagine. And as Palantir rolls out new products, which they've been steadily doing over the course of 2021, their TAM should be theoretically getting larger because they're increasing their access to new potential clients. But if you try to find analyst assessments of what Palantir's TAM actually is, you will probably see a figure like $120 billion. And let me show you 2 articles here. This one from January 15th, 2021, and this one here from September 3rd, 2021. And in both of these articles, Palantir's TAM is quoted as being $120 billion only, despite the fact that over the course of 2021, they obviously increased their product offering and should theoretically then have increased their total addressable market. It's just not actually accounted for or reflected in the analyst estimates. So that's bull argument number 1. And the second major argument why I'm still very bullish on Palantir for the long run is that they have an incredible moat on several different fronts. First of all, they've got the product development moat, and I believe that they're at least a decade ahead of any serious competition. And as Palantir software, especially the predictive analytics AI side of it, gets trained on more and more data, that moat is going to increase as well because they're going to get better, faster, smarter, more efficient all across the board. Additionally, there's the economies of scale or efficiencies moat. And there's a great article here on Seeking Alpha that talks about Palantir's moats, and I want to read you a very quick quote here. I believe there is a point of no return for customers where Foundry use cases are multiplying, efficiencies are being realized, and the software is becoming less a service and more the central operating system of the enterprise. And the author goes on to explain how Palantir provides so much value and gets companies so hooked on the product that the cost of leaving or switching to an alternative service provider or developing their own service in-house is essentially too high. It's prohibitive. It won't happen. And so for these reasons, I believe that Palantir will continue to add new clients at an increasingly rapid clip, and that as it retains more and more of those clients, that revenue is going to get locked in and it's going to have a snowball effect over time. Now, taking all of that into consideration, of course, there aren't zero risks with an investment like this and with a company like this that's trying to grow. And I'm going to highlight now two major risks that I see for the immediate future. First of all is the potential for lagging growth. Now, Palantir's executive team has projected a year-over-year growth in top-line revenue of 30% per year for the next 5 years. And part of me believes that that is a conservative projection so that they can under-promise and then over-deliver. However, in the last quarter, we saw something that was a little bit concerning. And what I'm talking about is that the quarter-over-quarter revenue growth was only about 4%. In Q2, they grossed $375 million, and in Q4, they grossed $392 million. So while year over year, their revenue figures are still looking impressive and the growth is strong, quarter over quarter, 4% growth is not enough in my opinion. And so over the next couple of quarters, if we don't start to see a much more significant trend upwards, then that could be a red flag for sure and potentially a sign that something is going wrong in the sales cycle, that they're not bringing in nearly as much business as they could be or should be. The second potential risk that I want to highlight is the issue of commercial adoption versus the government side of the business. While government revenue has definitely gotten Palantir to where they are today, if they are to become a $500 billion enterprise or a $1 trillion business, that's not going to happen on government contracts alone. They need to pivot much more heavily towards the commercial side of things. And since going public just over a year ago, the commercial business has definitely grown significantly. In the Q3 earnings report, you can see that they have 37% year-over-year growth in the commercial revenue, and the US commercial revenue accelerated to 103% growth year over year, which is definitely a huge positive figure. But relatively speaking, the government revenue is still too high. And don't get me wrong, I don't want to see those government revenues drop. In fact, I would love to see them continue to grow as well. But relatively speaking, I think that the pace of growth on the commercial side needs to increase dramatically so that it eclipses what's happening on the government side of the business, because that really is where the future is. And I believe the business is headed that way. There's just a little bit of a lag time. This year, Palantir hired, I think, 60% additional sales staff. So that's going to take a little bit of time to see the results of all those new hires and them going out, following, chasing down leads, and bringing in new business. Also, with all these new product offerings being launched, like Foundry for startups and Foundry for crypto, I think it's going to take a little bit of time before we see the results of that and the company starts to reap the rewards of those investments, but it's definitely going to come. The pipeline, in my opinion, is super backlogged right now, and so the results didn't really show in Q2 to Q3, but I am very optimistic over the next few quarters as well as the next few years. In the meantime, anybody invested in Palantir is going to have to trust that the leadership team in Peter Thiel and Alex Karp knows what they're doing and has a real plan and is laser focused on the future. And while I'm waiting for the results of this investment to potentially pay off in the next 3, 5, or 10 years, I'm thinking about changing the colors in my spreadsheet here so that instead of looking at a column filled with red, maybe I'll just make it blue. It's all about psychology. I think 2022 is going to be a very interesting year for this company. There's a lot of opportunity out there, but also there's a lot of overall market risk with the fact that inflation has been rising dramatically and growth-focused tech companies tend to get hit pretty hard when there's inflation, so we'll see what happens. But either way, I think that the fundamentals of this business are very, very strong and that the negative price action that we're seeing now is nothing less than a buying opportunity. That said, this is not financial advice. Definitely always do your own due diligence, invest safely, and I'll see you in the next one.